Hello everyone, and welcome to Next Vault. Today, we'll be discussing an exciting topic: how to invest hundreds in the stock market in 2025. Whether you're a beginner or have some experience, there are plenty of ways to invest wisely, even with a small amount of capital. If you're ready to make your hundreds grow, let's dive in. Why invest hundreds in the stock market? Why invest such a modest amount like 100? For starters, stock market investments, even on a small scale, can help you stay ahead of inflation and grow your money over time. With a long-term investment horizon, even a small sum can compound into something significant, thanks to the power of compound interest. Investment options for 100. How can you invest your $100 effectively? Here are a few options. Invest in individual stocks. If you have time to research, you can invest in solid companies like Apple, Tesla, or Amazon, which have shown steady growth. Platforms such as DeGiro, eToro, or Revolut make it possible to buy fractional shares of these companies with as little as 100. ETFs, exchange-traded funds. For diversification without too much risk, ETFs are an excellent choice. These funds track indices such as the CAC 40 or the S&P 500, allowing you to diversify your portfolio from the outset. With hundreds, you can buy a share of an ETF and access a basket of stocks. Robo-advisors. If you prefer an automated solution, robo-advisors are ideal for beginners. They manage your portfolio based on your financial goals. Platforms like Nilo or Yamoni can create a tailored investment portfolio for you. Fractional shares. Many platforms now offer fractional shares, meaning you don't have to buy a full share. For example, you can invest 100 in a Google share without purchasing the entire stock. Risks to consider. Investing in the stock market always involves risks. The market can be volatile, and past performance is not indicative of future returns. If you invest in individual stocks or ETFs, you should be prepared for price fluctuations, especially in the short term. This is why a long-term investment mindset is essential. Diversification through ETFs can help mitigate risks, but returns are never guaranteed. How to allocate your hundreds. So how should you allocate your $100 for maximum efficiency? Here's a typical diversified portfolio allocation. Year 50. Invest in a diversified ETF, e.g. S&P 500 or MSCI World, for broad exposure to global markets. 30s. Buy a stable individual stock, e.g. a company like Apple or Microsoft. 20s. Explore fractional shares or cryptocurrencies for higher risk, higher reward opportunities. This approach allows you to diversify your investments while minimizing risk. Where to invest and how to get started. Ready to start investing? Here are some user-friendly platforms. eToro, easy to use, offering access to stocks, ETFs, and even the ability to follow other investors. DeGiro, a popular platform for investing in stocks and ETFs with low fees. Revolut, great for beginners, providing simple investment options. Opening an account is straightforward, but take time to research platform fees, as each service has different pricing structures. Conclusion: investing $100 in the stock market in 2025 is not only accessible, but with a solid strategy, you can start growing your capital. Remember, understanding where you're investing is crucial, and you should never invest more than you're willing to lose. Subscribe to Next Vault for more financial tips, and feel free to leave a comment if you have any questions. See you in the next video.